Thank you for your interest in endPoint Trading. We are a market trading and financial coaching service that communicates near real-time trade alerts. Most of our trades are focused on options due to their relatively low cost and leverage potential. A 1% stock move typically translates to a 10 to 20% change in a short-term option. Please note, we are not financial advisors. We are not endorsing that anyone enter the same trades. We simply communicate what trades we have entered for educational purposes, and it's up to individuals to determine if he or she wants to enter similar positions based on their portfolio composition and trading strategy. To trade options, we suggest a brokerage account with at least level 2 option rights and a minimum 30,000 cash balance. We typically enter and exit positions within the same day, and the brokerages require a $25,000 cash balance due to avoid violating settlement rules. We recommend either paper trading or starting small, trading just 1 or 2 options until you are comfortable in trading house money. Our strategies include risk levels as follows. SPY ETF. This is our lowest risk strategy. We trade in and out of this ETF for nominal gain and accumulate profits for bigger subsequent trades. The goal is to sell within a day or two, but if that does not occur, we simply hold the position and earn dividends. Covered calls. When the market corrects, we purchase a select list of stocks in increments of 100 shares. We sell calls against those positions and generally buy them back after a gain of 80 to 90%. If the stock moves up and against us, we'll buy back the call at a higher cost and immediately sell a new call, mitigating the loss. This strategy has a couple of advantages. We earn stock appreciation and dividends, as stockholders are typically generate enough income to own the stock free and clear after 12 to 18 months. SPY calls and puts. A more risky strategy, as the options expire within a day or two. We purchase SPY positions typically at market close and sell at or near market open the next day. Some of the trades involve a volatility option trade, which adds risk but is not required. We also use this strategy at quarterly option expiration. Earnings. Our most risky strategy in the service. We monitor a few companies' earnings releases and buy puts just before the announcement. Positions are sold at market open regardless of the profit or loss. We also make 401k adjustments time to time. For example, employing our strategy avoided a 23% decline in early 2020. We will communicate when we are moving our investments from index funds to the 401k cash option and vice versa. Note that we do not pull funds out of a 401k account to avoid penalties and taxes. We just change funds temporarily. Currently, our allocation is 50% S&P 500 and 50% international index funds. Given the state of interest rates, we envision never investing in a bond fund. One other strategy is tool-based, the screener. This is our most risky strategy, and movements occur very quickly. It's not uncommon to exit a position within minutes, which is too quick for this particular service. A few comments regarding the service. We don't trade every day, but when we do, we try to enter and exit trades at the beginning or end of market hours. Our goal is not to optimize a trade, as that would require monitoring positions constantly. We want to be in and out, trading no more than 15 to 30 minutes every day. To that end, we typically enter limit sell orders immediately after purchase. The game is not about getting the lowest price. The game is about capitalizing on momentum. For what it's worth, we use an IRA account for trading, putting our tax liabilities to work. You can certainly trade in a taxable account, it just requires more paperwork and tax payments every spring. Finally, we use WhatsApp to communicate our trades and limit the number of attendees.